What's up, guys? Today's video is a pretty basic one. It's just about what indicators I use to day trade. So I have some indicators on my chart. Not all of these are even needed to trade or to do what I do is scalp. Like I have some EMAs. I don't necessarily use those for 99% of my plays. I kind of just have it up because I've always had it on my chart and I'm used to seeing them. But I'll go more into depth with that later. So the first indicator I'm going to talk about is volume. This is one of the most important indicators. It pretty much tells you that where a lot of buying and selling action is happening. Like you can see over here, volume is pretty low, and this is right off open too. So yeah, today was a pretty choppy day. There wasn't a lot of volume. Let's say you were looking at this trend break, you see this volume candle picks up, so that's a confirmation of the trend break. You could have played something like that, but you want to see a lot of volume going into your levels. You don't want it to be low volume going into your level. Like if you're over here in puts and you see low volume, you might not get that continuation to, let's say, low of day or 410 or something like that, if that's what you're looking for. The volume indicator I have, it has selling volume as white and then buying as green, just so you can see more information in that volume candle versus just a one volume stick. You can see both buying and selling. So I think it is green when the orders are filled at the ask, and then white when they're filled at the bid, meaning that market orders are filling either at the ask or at the bid, saying that this is buying or this is selling, because technically every transaction has a buyer and a seller, so you have to determine whose market order that is, either that's a buyer or a seller. Another indicator that I have is ViewUp. I barely ever use it. Some people use the bands on ViewUp. Let's see if I can get that on my chart. But it has like an upper VWAP and a lower VWAP. Let me see. Yeah, there you go. So this is your upper VWAP and this is your lower VWAP. If you're playing, let's say, calls at high of day, you see, this is why I don't use it, is because it doesn't really respect how I would, it doesn't really mean too much to me personally, but it gives some kind of true range away from the middle VWAP, which is this purple line. So this is X units away, and then this is X units away. Once you start breaking those outer bands, you're getting into overextended territory. So yeah, I don't use it. So yeah, that's something some people do look at. It's this one. Yeah, but I do have this middle VWAP. I've always had it on my screen. I don't use it ever really, but it's good to know. So VWAP is basically volume weighted average price. So let's say there's 100 shares traded, 99% or 99 shares were traded at 100, and then one share was traded at 0. So VWAP would be at 99, for example, because it's the volume weighted price. So right off open, volume picks up because it's market hours. So that's why you see VWAP fall so aggressively here. Even though price goes up, VWAP's barely going up because look at the volume down here. See, volume starts picking up here, and then you can see VWAP moving up. I don't really trade off that. It's just something I have on my chart. Another thing I have is these EMAs. The values I have on them, why do I keep doing that, are 8, 13, 21, and then I have a 50 and a 200. Do I use them? Not really. I just kind of like to see. So let's say we're having a trendy day. So this is a cleaner chart, for example. If you have a trendy day, if we bounce off these two EMAs, it's good for continuation on a couple stocks. SPY and ES are a different story, but let's say this was Tesla and we're trending down and we bounce off of these, you can play those continuation lows or something like that. But you don't just want to do that all the time. I just do it into key levels with good volume, good momentum, and futures correlating, which goes into my next indicator. Not really an indicator, but something I look at for my plays are futures correlation. So one sec. So futures correlation is pretty much, let's say I'm looking at calls on Google for this 110 break. I'll just chart that real quick. 110 is right there. You can see that Google, so it's gonna be hard to see. Okay, let me move this. Okay, so you can see that Google is slowly trending up throughout the day into this 110 break. It does tap it over here, comes back, but you can see during that time NQ, which is the NASDAQ, is pretty much consolidating until it finally has this breakout at 9:54 to 10 o'clock. So let's see, 9:54 to 10 o'clock, and then we get the breakout right after that. So seeing futures make a big move and you're looking at upside on your stock, that's going to be good, but you do want to see your stock stronger than futures if you're playing calls, and weaker than futures if you're playing puts. Because so futures are pretty much like the rising tide carries all ships, or whatever they say. So let's say futures are trending up all day and you're looking at puts. At some point your stock is gonna give it up and then start moving up with the market. It can't, it can have its own strength or weakness or just move on its own, but generally your stock, if it's like one of these big cap stocks, Google, Tesla, Microsoft, Apple, it's going to move with the market because they're highly weighted on the market. I can show you guys. This is this is the NASDAQ. So let's say you're playing Microsoft downside and the NASDAQ is going up, all these stocks are green. It's going to carry Microsoft to be green because it's so highly weighted on the NASDAQ. So you want to see futures correlating with your stock, so futures going up and you're playing calls on your stock, and you also want your stock to be stronger if you're playing calls or weaker if you're playing puts. So that's another huge thing that I look at. One of the most important things that I actually look at. So the next, I'll move this back. Okay, that good? Yeah. So next indicator I look at is level 2, which is right here. This is pretty much the unfulfilled orders in the market. So you see the bid and the ask. These orders might not ever get filled, but for the stock to move up, these ask orders have to get filled, and for the stock to move down, these bid orders have to get filled. So I'll just give you an example. I'll just talk about an example. So there was a big wall at 110. So when we came up and tested 110, there was, let's say on the ask, 110, and the ask size was, for example, I don't know exactly what it was, but let's say 70,000. So for Google to break this 110 level, you need a lot of volume to push it through, to fill those 70,000 orders sitting at the ask. If it doesn't have enough volume, then sellers are eventually going to step in and start pushing it down until buyers can pick up enough volume to push it through. You see, we came here, we bounced again, until finally we had enough volume. Futures was correlating to push us through, and it didn't look like there was enough follow through on the next minute to keep it going. You see how volume died out? Like, look at where volume is compared to all these other minutes, you see? And also at this time, 10:02, the NASDAQ was topping out. It started coming down after that. So it's hard for your stock to have continuation when this is happening on futures. Let's see, 1002. Yeah, you see ES2. So that's another big thing I look at. So reading momentum on level 2 is kind of like watching let's say we're playing upside. You're watching the bid because those are buyers. You want to see buyers get strong and push these ask orders out of the way. So right now the ask is at 108.39. You want to see this bid get to 108.39 or even push through it, 108.40, 108.45, 108.55. That's momentum picking up. How the change in the bid went from 1 cent to 5 cents to 10 cents. And if it goes to 25 cents, and that's momentum picking up. So you want to pick up on that into your key level and watching volume move up. And the next thing you want to see is time and sales speed up. So while this momentum is picking up on level 2, you see futures pushing up, and then you see volume picking up. You want to see this time and sales chart speed up, and if you're looking at upside, you want to see a lot of green ticks, which means that this order was filled higher than the last order or equal to. And then the least important indicator, not really an indicator, but something you'd be looking at, is your P&L. You don't want to be too heavily focused on it, but you do want to keep it in mind. You don't want to be down 40% still holding. You want to know where your P&L is at, percent wise, dollar amount wise, just so you know where you are in your position. If you're up a lot, down a lot, should be looking to stop out, looking to take profits, things like that. But that's pretty much it. When you're a scalper, you don't want to be too focused on indicators. You don't want to have 12 indicators on your chart, MACD, RSI, whatever people look at, just because it's going to cloud your judgment. It's going to, how do you put it? It's going to slow you down in your decision-making process. So when you're scalping, you want to be in and out super quick. So if you're looking at 12 different things for confirmation to get in, one, you're probably going to miss a lot of plays because you're going to have mixed signals from your indicators. And two, it's just going to take you too long to make a decision. You're going to have to check off everything on your list, versus if you're just looking at a couple things, like futures level 2, you see how that green, on time and sales, like that's what you want to see when it's moving up. So, you look at these couple things and everything adds up pretty quick after you look at it for a while. So the more you look at these things, the easier it's going to be to see, all right, futures is moving up, level 2 is moving good, time and sales is speeding up, volume's picking up right into your level. Then you hit that buy button, and then you know where your stop loss is, where your take profit is. So those are just a couple indicators that I have on my charts. Use whatever works for you, but I found this to be very beneficial to use as a scalper, a very quick trader. If you're day trading, swing trading, you might look at completely different things. So hopefully this helps you guys. Peace.